Good afternoon, everybody. It's your lucky day. 2 forensic accountants for the price of 1. I'll try and move through this at a reasonable pace. The slides, I think, generally speak for themselves, but as a firm, we've worked now on more than 250 cyber business interruption losses. Majority of those have been in the UK and the US. We are now starting to see an increase in the number of claims that we're working on in continental Europe, and a particular favourite of mine that our German colleagues have been dealing with is a manufacturer of ladies' underwear. Goes to show that anything can happen with cyber. The first claims that we worked on were, generally speaking, small online businesses. We are now beginning to see an increase in the number of claims from large, well-known global companies. A number of those losses have been reported in the press. The early claims we worked on were generally denial of service claims. Now, the majority of what we see is ransomware. And I think that's because it is easier for a hacker to implement ransomware rather than trying to bring down a network via a denial of service attack. As we all know from our own computers, computer equipment goes wrong. And we are seeing a few claims coming through on system failure type coverage. But interestingly, particularly seeing as we've spoken already about construction DSU, we are seeing cyber claims coming from project implementations that haven't quite gone to plan. And I do wonder whether a future cyber product is going to be a DSU product for an IT implementation. The last 12 months, we are seeing an increase in the number of manufacturing and distribution type industry claims. NotPetya helped immensely by in raising the awareness of the cyber risk in those sectors. And as I say, we're now starting to see more and more of those claims. One trend we have seen, sums insured, frankly not being fit for purpose. I've got one large claim at the moment for a multinational company where the sum insured has effectively given them business interruption cover for 3 days. When you consider how long it takes for a business to recover from an incident like this, that's just simply not enough. Right, couple of claims. Retail bank. A bank is no different to any other business. It still sells stuff. And by stuff, I mean loans, mortgages, personal insurance product. Now, for us, that's easy as a forensic accountant to deal with. We're looking at the impact that has on the profit and loss account. So let's take loans and mortgages. You would look at the reduction in lending that has happened because of the incident. What is the interest rate you would have charged on that lending? For the personal insurance products that you'd sell, there's going to be a reduction in the number of policies sold. What is the average premium of those policies? What are the saved claims costs? This is not rocket science. This is a relatively straightforward concept, but it's something we're working through on a claim at the moment. But what's clear for this particular sector at the moment, certainly based on the conversations we're having at the moment, is the business interruption risk for a retail bank in property is not significant. If you can't go into one particular bank branch, you go into the next one. It's a mile further away. You've got to walk a bit further. It's an inconvenience. Exercise will probably do you good though. However, for a cyber, because of the fact IT is enterprise-wide, the cyber business interruption risk is much more significant. And that's why, certainly the retail banks we've seen, the sector hasn't got as much business interruption experience and knowledge as you would expect in manufacturing, for example. Which brings me on to manufacturing. For a manufacturing business, fire and cyber have a similar effect. Vlad has already said that cyber is kind of the same but different to property, and I would 100% agree with that. In a loss, production stops. Doesn't matter whether it's a fire cause or a cyber cause. the effect is the same on the profit and loss account. There is a loss of profit. And that should be nothing new, really, here to anybody here in this room. The claims that we're seeing, the issue is the period of recovery, particularly for a larger company. Manufacturers succeed really by virtue of scale. So for a larger company, you'll have multiple sites. The IT between those sites is interconnected. You have multiple servers, networks, and applications all connecting all of these different sites together. And certainly from what we've seen, and NotPetya confirmed this, if one site gets a cold, given the speed of contagion and the impact that has on the business, the rest of the company is effectively dealing with an outbreak of Ebola. Now, questions that we're seeing on claims, and these are genuine issues from claims that we've worked on. Period of cover, is that adequate? Under cyber policy, you're generally getting about 120 days as a period of restoration, maybe a little bit longer. On these larger losses, sometimes it's taking 6 months to get the business back up and running. The sum insured, I've already mentioned, that is a regular theme. We're also seeing issues where the insured has not thought through before an incident what their incident response, what the business continuity is going to look like. As soon as that incident occurs, they are in a crisis situation and they don't know what to do. And I think that's something where the insurance market, as collectively everybody in this room, can do something to assist. But in the 20 years that I've been working, it's not the age, it's the mileage, we have seen an increase in the number of the way in which IT is used within businesses. It has reduced the ability for paper-based processes to work. But given how long sometimes it can take for these systems to be recovered, I think it's important now for companies to look at what the manual workarounds can be so they can continue to trade, so they can continue to sell. Sometimes old school is best. That's genuine issues that we've seen on a manufacturing claim. This is a light-hearted slide, but there is a serious point to make here. Every business has an IT failure risk. Don't let any insured tell you anything different. But what I do think is critical is that everybody in the market, brokers, risk managers, insurers, claims consultants, we all have a role to play in working together to better understand the risk, not only for underwriters but also for the insureds, and to ensure that the policy actually meets the client's needs. I think I managed to get through that in 10 minutes. Thank you very much, everyone. Thank you.